Hey traders, Leaf West here. Another video in the series of videos that I'm doing right now to try and explain some of the indicators I use and some of the tools I use in trading. And this video is on the opening range levels and targets driven, calculated off of that for trading that I use. Again, I use software which automatically draws the opening range. And you can see here, this is Apple. I've stripped off all my indicators except for the one I'm trying to talk about here, which is again the opening range. The Apple opened up on higher on Friday, August 17th, and the first 5 minute range was drawn right after the 5 minutes was over with. This is a 3 minute chart, so if I actually draw a 5 minute chart, or actually draw a 1 minute chart, and you can see that for example, so we have 1, 2, 3, 4, 5. So after the fifth candle is closed, we start drawing off of the high of the 5 minute range and the low of the 5 minute range. So you can sort of see that the high candle was a second minute candle, and the high was 641.82, and the low was the low of the first candle, which was 638.78. And so it draws that, and I have my variables set at 5 minutes because that's just what I have found to be the best value of time for this kind of trading. So there's a bunch of trading strategies of how to use these values to trade off of, and they're very valuable early in the day, but they're also can be valuable throughout the day. And my software draws them every day at the start of a day. And if I change charts, say I change to Facebook, Facebook draws it as soon as you just call the chart, it draws that. And so I didn't want to have my screen full of these lines from every day. So you can't go back and look at the values on prior days. But what I have done is I've set up some, for example, let's go to a 1 minute chart and go back 2 days. So there's none drawn, right? But I can, if I want to, for chart purposes, or if I'm teaching somebody or I'm doing a blog and I want to see what my opening range would have been and the levels targets off that, I could draw just some Fibonacci levels. So that's 1, 2, 3, 4, 5. The bottom of the fifth, lowest level in the 5 minutes, opening 5 minutes is right there, right? And then I could say I want to have a template, and I want to have this as the opening range template with targets. So there, that's the equivalent to opening range, but it's drawn manually on other days. So you could actually see that. I go back 2 days in Facebook, for example. Let's go back to my 3 minute chart, and we can see that in Facebook, again, this is 2 days ago, and I had to draw it manually, but you can see how the opening range levels are important in terms of price couldn't hold that level. It broke below, came back up and tested, pulled back, and then finally got above, but then couldn't hold and broke below. Right? So that's, you can do that. You can do that manually any day of the week, right? But my software just allows me to do that automatically when I open up a chart. And so here's Facebook, and you can see one of the things in Facebook. One of the strategies is if a stock is weak coming into the end of the day, you could get set to play the break below the 5 minute range if the stock looks weak again. And so here is that happening. So you could play a short on the break of that value. And price goes to these various levels and various targets and trades around them, and Facebook has been a bad example for that. But I have a study done which I have shown people and posted on my blog about the spiders. Now spiders was a pure range day yesterday, but today is Saturday, but on Friday was a pure range day, so it stayed inside basically at the lower part of the opening range. So it was a OPEX day, so it was a really bad day to try and show this as an example. But the stats show that about 2/3 of the time, price will either go to this positive 2.33 fib target or the negative 2.33 fib target. And then the other targets, the 3.7, the 5.12, and the 7.80, they're all varying degrees smaller in percentage chances of price going to those levels. But they do go on occasion to those levels. And I have a lesson module that goes like 25 pages or something like that, which go on the sort of 4 typical trading strategies based on the opening range. And really, that's all I really wanted to show you guys. It's just that that's what I use these. Let's look at a lot of range days yesterday, because yesterday was OPEX day, but you can see the value of the opening range and what price does. It comes back up, it tests it, it breaks up and it can't hold it, right? So then it trade off, right? And you can use it also as a sort of a filter for your bias and how you want to trade. And that if price is below the opening range, price basically has a bearish tone to it. And if price is above, so an example on Freeport, just trading intraday basis, is that it was hard to make money scalping long Freeport because it had a negative bias to it, whereas Apple had a positive bias. It got quickly above the opening range and pulled back right to it, held support, and then moved higher. So and didn't quite get to the 2.33, negative 2.33. But let's just try and pick a few more examples of stocks that did something yesterday. Lulu was an example, right? So what did Lulu do, right? Lulu opened up and broke the prior swing high from the prior day and went. Basically, it spent only a couple minutes. And how long did Lulu spend on? One-minute chart. So here's this is why I have the 1 minute chart beside me, because you can get more information from it. So Lulu opened up, got some big range bars, emotional bars at the start, and then basically wedged, right? And then broke above the high of the opening range. And there you go. And then so what did it do? Went up to the first target, backed off, broke above, went to the second target, found support at the first target, went up to the second target. That's what these computers do. They go to these levels, right? It held support right underneath there and then broke above. And where does it go? It tries to go to the next level. And where does it come back to? It tries to come back to the next level. So anyways, I've got a big lesson module which goes through the rationale for all this, but you really don't have to know that. You just have to have something like this on your system and then watch price, and you'll see that these levels are very important for trading. And example, here's Deere. Right, so what did Deere do? Deere did the same thing, right? It opened up above the prior swing high in the afternoon and broke the top of the opening range and basically spent the whole day trying to get to the next target levels. Let's pick a stock that went down, actually. Oh, we had Facebook. Here's Netflix. Right. Here's another good example of trading strategies. Okay, I got a support level in here from some other thing. Let's just take this off. Don't want to clutter up. All right, so price broke above the prior swing high from the afternoon, broke above the top of the opening range, and then, as it often does, it pulls back, and this time we broke below, right, and we poked back up and we couldn't hold above. So that is a sign that price wants to at least go to test the other end of the opening range. So we broke below it, pulled up, couldn't get back in, and then down we went, and basically didn't quite get to the first target on the downside. But this still, the bigger chart on Netflix is that maybe we go a little higher after the huge sell-off. But we are at daily ATR resistance. Daily ATR resistance is 85.80, and price made it right to, sorry, to 65.80, and price made it right to 65.52 as a high. And one more for you guys. Oh, okay, Google did some gyrating around. Right? Here is a perfect example. Here's the first 5 minutes, right? And these are big range bars, so, and this is right at basically the swing high for the day, and that's why I generally like to at least get the first 5 minutes in, so I know some levels to trade off against. Very seldom will I trade in the first 5 minutes. Usually even the first 15 minutes I try and wait and see what can happen. And these give you levels to trade off of, and you can trade against something. Like, okay, so price went up and it pulled back, couldn't get back up, and went to the other side of the opening range. And it doesn't always stop perfectly at it, but we broke here and we came right back in it. So it shows you that price doesn't want to just run south. We're trying to hold support. So here we hold, and then bang. So what does it do? When it shows that it wants to hold the bottom of the opening range, it'll go to the top of the opening range. And it goes right there, and it's just getting tight right against it. And so that if I was on top of this stock right there, day trading it, I would have been getting long on a scalp basis. Now, Google, I had a whole complicated trading going on in Google, and 675 was an important level. It was a strike price I had on a written call that I'd done for my position. Anyways, I don't want to get sidetracked here, but anyways, you can see how price respects the bottom and the top of the opening range. They're very important levels, and by just having some simple software written, you can just go from chart to chart and automatically know where these levels are. Priceline's a crazy stock, but you can see what happened here. We pushed below, came back up into the opening range, couldn't hold it, pulled back, but made a higher low and started to wedge our way. And so as soon as you make it back, show that you can make it back into the opening range, you'll go to the other side. And we actually broke above, pulled back, small candles, and that showed you wanted to try to go higher. And sure enough, we did. Broke above, pulled back, popped up, and then at the end of the day, we gave it back. But as you can see, these levels are important. Let's see if we can get another one. Nike. Right. So what is Nike doing? Same thing, right? We broke above the prior day highs, broke above the top of the opening range, and made some small sort of doji candles, pulled back in, and rammed it right down to the prior swing low, which was just below the opening range. Got back in, showed that you could hold it. Bang! You go to the other side of the opening range. Break out, pull back in, and that's a positive sign. So for me, I would have traded long the stock right here, as it's showing that it wants to break higher. But as it failed, it basically fails, comes back in, but it can't sell off. So I don't know if you get stopped here or what have you, but then we break back above the top of the opening range, and this time it works for a trade. So you can get what's it, 95.80 to 60 cents, 70 cent move, and then you get some extreme trend candles warning you that this trend is probably done. MasterCard. MasterCard does this sometimes. Sometimes the first 5 minutes is so big that it consumes the whole day, because it's the market maker just makes people pay that first 5 minutes. So that's another reason why you got to know your stocks and how they trade. But even with that such a huge range being an issue because of the first candle, you can see what happened later in the day, which is right around lunchtime Eastern. Price went back up to that top of the opening range, and it failed there, and so it pulled back. Is there any more here? Let's see. LinkedIn. Right? What did LinkedIn do? It gapped lower and showed that it couldn't get above the first 5 minute opening range. So then it went down the bottom, and if it's going to go higher, it's going to bounce off there and go back up to the top of the opening range. But it broke below. It tried to stay above and broke below, and then boom. This showed weakness, right? So what does this, again, go back to the filter. This shows you that this stock is weak. So you could have made money scalping it north here, but if you're trying to get in a longer term trade, a 1 to 3 day trade or longer, then you're not guaranteed with this kind of weakness to get that kind of move higher. But it did try to go back to the opening range, and it failed to get even to touch it. So that was a sign of weakness. And then we went down to almost the 3.77 target, and we basically hung out there the last part of the day. A couple more. BFP, no, that's not the one. CMG. Again, a big range candle the first 5 minutes, encompassed the whole day. Intuitive, same thing. A lot of these stocks have really big first 5 minutes. That's a classic sign of why you don't want to get involved in the first couple of minutes of trading, because you can pay a big price for that. You can be lucky, but you can, more times than not, you're going to get punished. Yeah, so this is Spider. So again, you can see how price reacts around the levels, right? And that we made a higher high here, and then we pull back, But this is pure whipsaw. OPEX kind of whipsaw in the last 30 minutes. So I would not suggest anybody do that. Here's gold. Here's the gapped higher, broke the top of the bottom of the opening range, and then came back and basically chopped between targets, between the bottom of the opening range and that. So to me, this is not a bullish looking action for the follow through on Monday. You want to see, like, this is what you want to see, right? This is a bullish stock. One that ends on the top end of the opening range. Let's look, for example, at bonds. So what did bonds do on Friday? I didn't trade the bonds, but this is the first I've looked at it. Okay, we gapped higher. Price broke the opening range, pulled back, and it was a pretty small opening range. It was only 12 cents. So this is the flip side to those big, huge ones, in that you can get a little bit of chop around the opening range. But for most securities, you get a half decent size opening range, and the opening range means something. But you can see, like, TLT does trade a lot at these levels, like the Spider says as well, that they respect these levels a lot. You can see that, again, pullback, support, resistance, pullback. So that really is all I can show you guys regarding open range, my open range tool, and how I try and use it. Hope that helps, guys.